All right, guys, back in the action once again. Tuesday evening, March the 7th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a bunch to cover in tonight's video. We get the charts all prepped up in the background, got some oil, some S&P, and some gold. Lots of important topics to talk about and some great setups looking on those charts here for tomorrow. But of course, we've also got a weird week this week. Got a holiday shortened week. We get some big news tomorrow. I want to check the calendar for you guys to make sure you know when to be trading tomorrow, when to be sitting on hands, and what to expect for the rest of the week. So as always, got a great video in store for you guys and gals tonight. Charts are ready. The calendar's ready. Glad to see you ready here with me. Before we jump into the charts tonight, though, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every evening on this video. So hit that subscribe now button to make sure you never miss a beat here on the YouTube channel. And as always, if you have any questions, drop those questions in the comment section below. And boy, oh boy, I appreciate you guys tuning in every evening. If you tune in every evening to watch this video, hit that thumbs up button for me. Always appreciate you guys and gals showing the love on this nightly newsletter. So make sure you subscribe, drop those questions in the comment section below. We'll circle back after we finish up and hit that thumbs up button here before we get started. All right, let's jump into the video tonight. I want to make sure we check the calendar for tomorrow. Let's grab the news calendar courtesy of Econo Day. And let's take a look at what's happening here tomorrow. Tomorrow is Hump Day. It's Wednesday, April the 8th. Now, kind of put this in context. We know this is the second week of the month. The second week of the month is usually relatively quiet because it's not the end of the month. It's not the third week of the month. So it's usually relatively quiet. But as we mentioned in last night's newsletter, we've got kind of a weird week going on, right? Friday is completely closed, right? It is it's a holiday on Friday, Good Friday holiday on Friday morning, the 10th. Easter weekend coming up, right? Real big holiday weekend. Full week next week, obviously, Monday through Friday. We don't get the Monday off after Easter. They tuck off the Friday before it. That's a bit of a curveball. We don't see that very often, so I want to make sure you're aware of that. Also be aware, too, the last half of the session on Thursday is also closing. They're closing up at 2 p.m. Eastern Time. Bond markets are closing early on Thursday, right? Give everybody a good chance to get ahead of the rush hour traffic. So we know that as we go into this holiday weekend, we know that anytime the markets are closed, what does it do? It creates this sense of scarcity. There's less available time to be trading. Now, this may not apply much to us. We're just kind of individual traders, but imagine you were working at a trading firm where you have to be, there working with your clients' accounts. Remember, if you run a trading firm, you don't make money unless you trade. And so when you've got markets that are physically closed, latter half of the day on Thursday and all day on Friday, that puts a tremendous sense of scarcity now where Monday's behind us, Tuesday's behind us, Wednesday, you're looking at really what is the last full day of the week tomorrow, and of course that first little bit of Thursday morning. So as I mentioned in last night's newsletter, do not expect this to be a sleepy second week of the month. We have a lot of scarcity that is condensing things into tomorrow's trading session. Now, there's a bunch of news on the chart or on the schedule you can see here. We get that weekly inventory report at 10:30 Eastern Time. Now, this would normally be the big news of the week for oil traders, but we talked about this last night, if you recall. On Thursday morning, we've got Jerome Powell speaking at 10 o'clock, but what else has happened on Thursday? We're supposed to hear about this OPEC production cut, right? Supposedly, the Americans, the Russians, and the Saudis are all getting together and they're going to cut production. Well, surprise, surprise. We come to find out today that it may not actually happen. Apparently, there's a deal on the table right now for no production cut. It's a lot like high school, right? High school shenanigans. So-and-so says so-and-so, and so-and-so will do this. It's, as I mentioned in last night's newsletter, the news is supposed to come out about this production cut on Thursday. But we here along the way, I'll be surprised if we get to Thursday and we still have some hope for a deal. Now, obviously, I hope they get this all sorted out here, right? But that big kind of known unknown right now on Thursday, we might see it all fall apart over the next 24 hours like it looks like it's starting to do right now. So even though the world's waiting on OPEC on Thursday, kind of the moral of my story here is, again, tomorrow at 10:30, this would normally be the big news of the week. I doubt it's going to be the big news of the week for oil traders here because everyone's going to be kind of lingering on every word out of OPEC right now. The U.S., Russia, and Saudi Arabia are the key components, apparently. That's what we're seeing right on the news wires right now. So we do have some big news tomorrow at 10:30 Eastern time. As always, I try to trade around that news report. My cutoff for crude oil on Wednesdays is at 10:15, and then I pick it back up after about 10:40 Eastern time. So I like to give it a good buffer around that oil report on Wednesdays. And as you saw today, it was relatively sluggish, relatively slow. As I mentioned in last night's newsletter, if you're on your own tomorrow, you've really got to be careful not to force trades on oil if it's sitting there slowly, like we saw a lot of right today, because we know what's happening. Everyone's waiting for that next big headline to come out of OPEC. So normally that would be big news tomorrow, but I don't think it's going to be. I just don't think we're going to get that boom we usually get out of that news report, just because everyone's waiting to see what's going to happen on Thursday morning. What is more potential tomorrow is for some sort of headline to come out that the oil deal falls apart, right? Or there's some sort of update on the oil deal, right? So-and-so says this, so-and-so won't do that. Those are headlines I will definitely be watching closely and relaying to all of our clients tomorrow in the trade room. Then tomorrow afternoon, now, again, this would normally be a pretty big news report, the FOMC meeting minutes. Keep in mind, this is the FOMC announcement from a couple weeks ago, right? So this is the news, kind of pre-coronavirus, if you will, right? A lot of these news reports right now, they're not really being watched very much because they aren't really relevant to what we're seeing right now. I'm sure those FOMC meeting minutes will be almost entertaining to read tomorrow afternoon as they say euphorically how great the economy is, right? Only do they know they're walking into a storm brewing ahead. So I just don't think we're going to see a lot of people that will pay attention to it. If you have trouble sleeping tomorrow night, you might want to peel open a newspaper and read those FOMC minutes. It might be some satire that might actually be enjoyable to read. All kidding aside, though, we got some pretty big news reports tomorrow, but I don't think these are going to be too much of a dent on our radar. Everyone's watching that OPEC production cut deal. Everyone is watching the curve, as we keep saying, all right? The curve. I'll bet you never want to hear me say the word curve ever again after this thing is over. In fact, just before I hit record on this video tonight, I heard from the U.S. President Trump, well, not me individually, but on the news wires, right? President Trump here in the U.S. saying he now is putting together a task force for reopening the economy after seeing the positive stabilization in places like China, places like Italy, and of course now the epicenter of the United States in places like New York City. I'll tell you right now, if you're being affected by this around the world right now, I am praying for you all out there. I live in Los Angeles. We've had kind of a flat curve the whole time. We got kind of lucky out here on the West Coast just by pure luck by cutting off that air travel from China. But the reality is there's a lot of people out there that are really scared of this stuff right now. So the good news is we are starting to see that flatten out. As I mentioned last night, I think a lot of this, we got to be careful right now. That blow off top, right, that we saw in Italy, like I said last night, it feels like we might be before that blow off top here. So I'm not quite cheering as much as I want to be right now, but I'm always I am I want to trust it, but I want to see verification right here first. That is something that is the known unknown here for tomorrow. And again, keep in mind, right, that sense of scarcity we're going to see in the markets tomorrow, because tomorrow is going to be that last full day of the session. So we're waiting on updates from OPEC. We're waiting on updates, right, from all the hot spots around the country. We're going to be doing this together tomorrow morning. Keep in mind, every morning, Monday through Friday, 8 o'clock Eastern time, we get together right in our trade room. The best way to do this is to come out and trade it with me every morning. I'll put all the registration information for you in the description of this YouTube video. If you're on the blog right now, there's a big blue button for you right below the video on the blog. That'll get you registered for as a member, right? And of course, for tomorrow's trading session. Let's not waste any more time though. Now you know the lay of the land here. Let's grab some charts here. Speaking of tomorrow's trading session. Now everybody's talking about oil right now. We got some oil, some S&P, and of course the gold here to finish up today's trading session. Why don't we grab that oil first? Let's jump into the oil, the black gold, the Texas tea, right? And let's see what we got going on here right now. Now again, on oil, everyone's waiting on this production cut number. If the number comes out tomorrow, surprisingly, we may see a real strong rally. If we start seeing this soap opera that we're so accustomed to, of where it looks so good on a Monday, but by Wednesday afternoon, all of a sudden that deal's not looking so good, this thing could really start to accelerate back down to that $20 a barrel area. If I zoom out a little bit further on this right now, I want you to kind of see the bigger picture here. There's a lot of, there's in my opinion, there's three big moving pieces right now on this chart. Now, first of all, you've got this big, strong move coming off the high. That obviously, well, maybe not obviously, but that to me gives the bears firm control of this market. We've got this accelerated move as we go lower. And we talked about this last night, right? We had the bears in control last night. We're looking to get short right off of the high of that hidden channel. Very well done, right, for a lot of you guys. Saw some good emails coming in from today. Now, we know we're bearish, and you can see here, right, we got some more targets waiting down around these measured moves. I want to find some resistance levels to try to get short, and I really like that underbelly of that range at 25, 28. We're going to talk a lot more about this here in a moment. That's one kind of component of this chart. Another component, and I mentioned this last night as well, if you draw a channel off those two highs, right? Well, first of all, draw a trend line off those three highs, bring it down to that low. What do you get? A spike in channel. Now, spike in channels are one of those patterns that every trader really needs to learn, because anytime, well, first of all, they're very common, but they also give us such a great clue as far as where the best buy is. So this is a very simple illustration here. When I look at a spike in channel, the spike in channel has two components to it. It has a spike, shocker, and a channel. Yeah, see, I'm a pretty smart guy, right? Two components to it. I'm kidding with you. Now, if I take the first pullback and the base of that channel, and I draw those lines out here, this creates, the buy zone. I call it the battle zone, because usually the pullback is so strong, the bears try to sell it, and we buy into their stops. That's usually how we're going to trade those, right? Those, again, buy zones or battle zones, if you will. So the bottom line, though, is this is the structure you want to look for on a spike in channel. I'm looking for, it's usually 1, 2, 3 moves inside the range, and then you get this deep pullback as buyers are trying to get in at a lower price. So when I look at the chart right now, ready, 1, 2, 3, we go back to our chart now. There's that trend line. I've now got us pretty much right there. Now, how do we trade this? Do we buy this right? No. We definitely do not want to buy this right now, especially with this production cut looking wobbly, to say it a nice way right now. So we definitely don't want to buy it right here, but this would be an example of where we may see a strong move down. We may see a crown reversal off the low. If you're a veteran, watcher of this newsletter, those crown reversals are very reliable. Or we may see this market 1, 2, 3 reversal, and we may get our chance to buy it on the way back up. That is the second main component of this chart. Now, the third one is what all the bears are hoping for. All the bears are hoping for, and that is that big round number back at, it is a big round number. It's a juicy, psychological, very easy to wrap your arms around. $20, right? $20 a barrel. That print at $20 a barrel is why there are places under $1 a gallon, right, for unleaded gasoline right now here in the U.S. I wish they would do it for us here in Los Angeles. They just always stick us some more taxes every time the price goes down. But the bottom line, though, is we know the market's trying to get down to that area. Now, the problem is we got to get through this battle zone, right, this buy zone. So if this thing turns into a bloodbath, we know where we're trying to go. We're trying to get down to that $20 barrel, a barrel area. So that to me really gives me all the information that I need. I have a strong bear move down. I'm looking for a chance to sell off resistance. If for some reason that pullback escalates going higher, I know where they're trying to go. They're probably trying to get back up around that little tiny range around 27, little pit stop there, and then make the move up, right back up to retest those highs. That would be the production cut is looking good headline tomorrow as well. Or do they keep on grinding lower here? And if they do, we know they're trying to make that move down to that $20 a barrel. So now we get a pretty good idea, right? I think that gives a pretty good lay of the land here. So now let's get a little bit serious as far as how we're actually going to trade this. Now, obviously, we're bearish in the short term. Let's stick with that first. We know we've got this what's kind of like a 1, 2, 3 leg move down, right? So I'm drawing off those lows. I'm running up at that high, and this is going to give me a level of resistance that I know I can trust, right? I know I can trust that level of resistance. I'm bearish. I want to sell at resistance. That's a great level. I also can see if you go a little bit further out, we got that little gap, that big move down, kind of Monday's low, if you will. That is, this is one of those areas where I wouldn't be surprised if we pop right back up and just sell off immediately once we get to that 25, 28 area. That's going to be a great level. And you can see how those two levels kind of come together nicely up around that same location. That's a pretty interesting spot there to be looking at. And then one thing I noticed here, we don't see these that often, and that is a full-bodied candlestick. You can't really see it very well. There's a lot of candles on there. It's a full-bodied candlestick. Now, you'll notice we don't see those very often, right? Full-bodied, right? Where there's no wick, there's no body, it's just bam, right? It's like a Lego. It's just a block of red, right? Most red candles, they're going to be a little bit of wick, right? There's some relief. Whenever I see these big block candlesticks, that always tells me there are traders who missed out on that move. That means that candlestick right there happened real fast. And that means that green candle was probably a lot of sellers trying to find a way to limit in on the pullback. And I'll bet you're going to have a lot of people waiting right above that little candlestick up there. And so that's really where I structure my battle zone. This is an area where I can sell at resistance. I can take a small amount of risk for a proportionately much larger amount of reward. That's the area I want to be a seller here on the crude. Now, as I go up to those highs, you'll notice I've got a measured move, right? I've kind of projected down here. That is very much to be determined at this time, and I say that because we don't exactly know how far it'll pull back. All I know is I'm going off of that big leg. I use the metaphor of dropping the rock in the water, right in the puddle of water. The bigger the rock, the bigger the ripples. And so I take that measurement, and in this example, I'm assuming they pull back right there. But if they were to pull back higher, this would be a little bit higher. So just be aware of that, please. I am using that first leg down, right? That leg right there. Don't worry about that one, right? That one's kind of irrelevant right now. Again, think of the rock that hits the puddle of water, right? Think of the rock hits the puddle of water. The bigger the rock, the bigger the ripples, right? Don't measure the ripples, measure the size of the rock. Okay, we'll talk more about that in our video course. Now, let's jump into our patterns here. What's the best way for me to get short off of this high? You can almost already see the potential here for a two-legged pullback. Now, as we go pulling back here right now, this is going to be a very good example of a two-legged pullback. I'm going to draw a trend line up off these lows, and I'm look to try to use that now as a level of resistance. We call those two-legged pullbacks, or 2LPs for short. So very simple pattern there, right? As we go higher here. Now, every once in a while, and we've talked about this many times on this newsletter, every once in a while what will happen is you'll see the market pop up, and you'll get this little trap high. Traps are also an essential component. And we saw this last week, if I recall. It's a little trap setup we use just above the high of that channel. Now, in this example, you're going to have a hard time with this one because there's that very steep channel here. So we have to get up, we have to go down, we have to literally trap. This is going to be a very, very tight spot here, the way it looks right now. Now, that may change, but the reality is if you want to sell above the top of that trend line, you've got to look for what I call a trap entry, because after all, traps are the best setups to trade when you're worried about selling into support or buying into resistance. Now, this could all easily evaporate if they can give us another low. Then at that point now, I can keep this channel on, this trend line goes away, and now I can bring that battle zone down a little bit. If we can get a new lower low here, that would, or even double bottom, a double bottom would be fine too. Then we mark up that level, we make up, right, a bigger battle zone, and now I wait for that pop. The big thing is I've got to get rid of this trend line. If I can kind of erase that trend line with some sideways price action or something, right, I can then do a lot more with this. But if we just simply pull back right now, that trend line is going to be a little bit of it's going to be difficult. It's not going to be easy. I want to get underneath it and use it. What I can also do is a lot of times those trend lines that I'm drawing here, right, a lot of times what will happen is you'll see them go up. They won't be able to go back all the way to hit the trend line. What will happen though is the moving average will come over. And so if I can get the bounce off the moving average here, then I know where stops are and I can sell into those stops. Okay, see, a lot of times people tell me they don't like the two-legged pullback pattern because it feels very scary. It is, because it feels like you're very bullish. I get that. So if you don't feel comfortable with the two-legged pullback, just think about where did they bounce back here. That's usually where you're going to find some stops down there. You can sell into those stop losses. Now, this may also apply here, again, the failure pattern. If we were to run lower here, right, let's say the market keeps going lower. Now that trend line isn't going to be in play anymore. Now what I can do is, again, I would mark up these highs, extend down that battle zone, wait for some profit taking, because eventually the bears will take some profit, get above the moving average, and look for that failure pattern above the moving average, literally waiting for a profit-taking rally, wait for buyers to try to buy the pullback. It'll look a lot like this pattern right there, where they go above the moving average, they try to buy the pullback, and we're selling into those stop losses. That's what we talked about in last lecture. That same pattern is what you're looking for here. You just got to find a way to get through that trend line. That's the only variable with that trend line that we're talking about. And guys, keep in mind, we're going to do all this tomorrow morning right at the opening bell. We'll go over all these setups again tomorrow morning at 8 o'clock Eastern time. If you're not there with me, the best kind of second best thing you can do is, if you're not with me tomorrow, is to grab that free trading course I have. I'll put a link in the upper right-hand corner for you right now. That free course, which is linked up in the upper right-hand corner, that will take you over to the website. You'll learn all my favorite setups. You'll learn my favorite trading strategy, the same stuff we use every morning in our trade room. So again, tomorrow morning and every morning, 8 o'clock Eastern time, right? I'll put all the membership information in the description of the YouTube video, as well as below the video on the trading blog, if you want to get registered tomorrow morning for 8 o'clock Eastern time, or grab that free trading course linked up in the upper right-hand corner. Now, I should also mention that anytime we see a rising support trend line like this, couldn't this easily reverse? Now, what would a reversal look like? A reversal would require a strong move up, a pullback to the moving average, and a jump off the moving average. Now, if I can get a strong move up, relatively strong, a pullback to the moving average, and a jump up off the moving average, well, now we're good to go long. Now, I'm not going to buy it way up here, but now what I'll do is I'll start to find support levels. If the market turns bullish, I want to buy at support. I want to sell at resistance in a bear market. I want to buy at support in a bull market. I'm going to mark up that new high. I'm going to bring it way down to that low now and grab that low. This creates that hidden channel. And these hidden channels are almost magical, how well they work. Again, you're drawing the trend line first off those highs. You're bringing it down and getting those highs to line up there. We're buying that pullback off of that low. Now, I'll be honest, sometimes after they get control, the market just rips. You know what I mean? Especially if there was like a production cut headline or the rumor of a production cut. That might be just all they need here. We know where they're trying to go. They're trying to get back to that 27, like I mentioned earlier. There's that little bit of a range up there that kind of kicked in from today. If it really rips higher here, another pattern, and this is where a little bit of experience comes in handy. If it really rips higher, and you don't want to miss out on that move, don't chase after it, but keep your eyes open for another pattern, which is called a two-try trap. Now, this one is a very specific. This one is a very shallow pullback. It usually will pull back just above the moving average, right? It won't pull back all the way to the moving average. It'll be a shallow pullback, a higher high, and a little trap low. Those types of setups almost always come just below the moving average, and as always, I always try to incorporate some additional, hidden channel there just to stack the odds in my favor. So now you got some good opportunities here to be a buyer. And again, we talked about where they're trying to go at the beginning of this lesson. Now, there is also potential, we're sitting down around this major support area. There is certainly potential this turns into a range. Honestly, I almost hope it turns into a range because it'll be easier. Once you see the double tops, the double bottoms, it could also be lower highs and higher lows. Once we start seeing that moving average start to flatten out, right? Looks like a range. Once we see that range, I'm going to take the size of that range now and put that up and find my level of resistance. It'll probably be somewhere around the same levels we're already watching, to be honest. It'll probably be the same spot. But once I find that new level of resistance, and I won't know until I get there, until we see how big the original range is going to be. But once we know where that range is, then I wait for a rally. I wait for a breakout. Eventually, the bears will run out of bullets, if you will. They won't keep selling forever down there. That will cause the market to poke its head higher. When it pokes its head higher, this is where a lot of times breakout pullback buyers will try to force that breakout pullback, and you know my plan. I'm looking to sell right into those stops. My favorite type of breakout is a failed breakout. That's my favorite type of breakout, right? The only breakouts I like are failed breakouts. I like to trade those failure patterns. We see a lot of those failure patterns. And again, right, tomorrow morning we'll do it together, or grab that free course I mentioned in the upper right-hand corner. Again, if the market keeps on running lower, I'm going to move down my battle zone. I'm going to keep looking for that pop as we go up. I'm looking for those buyers to foolishly here try to buy that pullback, thinking for whatever reason the market has reversed and looking to keep on selling. If we really turn into a bloodbath tomorrow, and this thing, again, this measured move is not really there yet. We have to get a pullback to get that measured move. If this thing really turns sour here tomorrow, keep your eyes open for this as a 1, 2, 3. mark up that low, mark up that high. I have no problem getting into that short down here, but you've got to show me some strength going lower, right? I won't consider that unless we see some strength going lower. And again, oftentimes this thing turns into a bloodbath if it's really running, especially if we see headlines tomorrow morning or overnight, right? Or the pre-market saying the deal's off, everybody hates each other, right? If that's what happens tomorrow, I hope they don't hate each other, by the way. I'm having fun with you. But the reality is once we get, if we get that headline, if we start seeing the bottom drop out of this, they're hunting for that $20 a barrel. We talked about that. And you now know, look for that two-try trap pattern. Again, always have to find those little traps off some level of resistance, and we're good to go there. All right. Boy, we got a great plan here for the oil. Hopefully, I'll see you tomorrow morning at the opening bell at 8 o'clock, and we can do it all together. Let's keep this party rolling now. We got the oil looking good here. How about some gold? The S&P is a good chart tonight, but I want to make sure. Let's take a look here at the gold, the yellow metal. Boy, blow off top, right? That is what you call a blow off top. We talked about how we talked about last night how gold was really lofty and how difficult it's going to be to buy up there, and that's exactly what happened. What do we know right now on the yellow metal? Well, first of all, we know we have a bear market. The bear market clearly gives those sellers control. But let's zoom out a little bit. Just we done oil. Let's get a little bit of a bird's eye view here. Let's zoom out a little bit here, and let's just take a peek at what the bird sees here right now, because there's a couple different things you can see on this chart, right? First of all, if I kind of go like that, there we go. You can see once again where we're coming off of. We're all the way up, and I got to give a couple more days of data on this chart right now. But you can see though, we are coming off that big top, right? That big 1700 and change top, and it looks like we're headed back into that range. This is kind of the granddaddy or grandmama of all the ranges here, right? Or on gold at least at 1650. There's a big magnet back there at 1650. Now, what you want to remember is that traders will get aggressive. They'll sell pullbacks. They'll sell strength when we get a large distance away from it. But look at how close we're starting to get here now. Remember, as we get closer to that magnet, you're not going to have as many traders who want to get short down there. And whenever we get close to those targets, we start looking for traps, right? Traps are probably going to be on our radar tomorrow if we go lower. So, bottom line is we know the bears have control right now. There's no doubt about that. They got that 1, 2, 3. My biggest problem, though, is if we don't get a pullback here in the short term to get short off some resistance up here, we may have to deal with getting dragged down into that magnet. Now, nobody wants to sell right on top of the target. So in those situations, expect that pop, and we'll sell into that pop from there, because that's going to give us the ability to get some small risk with some bigger reward, right? You can't get a small risk, big reward if you're trading right around the darn target. That's like going to the airport and getting a plane ticket for the airport you're already at. That's like me going to LAX and say, take me to LAX first class. They would probably throw me in one of those padded cells, right? Well, yahoos at the airport. The bottom line, though, is we don't want to be selling down around that magnet. Now, at the same time, right, we may be looking at a big rotation. There's your middle. If you look at this, right, from what I can see, that looks pretty symmetrical, doesn't it? I mean, I'm not doing a mathematical measurement on this, right? But you can definitely see we are within striking distance here on the gold, within reason here, that this could easily swing all the way back as we go. So imagine there's a pendulum here. The pendulum swings all the way up. They take a pit stop back in the middle. But again, a lot of news headlines right now we're waiting on right now. Could this thing swing all the way back down and pendulum swing back down? That is a very viable 1600 target. Probably not, maybe tomorrow, right? But it seems like as we go into the end of this short week on Thursday, we might be seeing ourselves back around that 1600. At the best case for the bears tomorrow, at the worst case for the bears, probably into this weekend, right? So that is definitely the possibility. So now as we zoom in, right? Now as we zoom back in here now, we get a little more close up on this on this chart here. Sorry for the delay on this. I'll hurry my behind up a little bit here. I know you guys are busy like I am, and I do realize I'm getting late here again. It's been such a busy week here in the office this week. We've had some different computers being installed and all kinds of fun stuff here in the office. So I do appreciate you guys sticking around with me here a little bit later than usual here. I'll be back to kind of my normal early bird self here hopefully next week. Let's see here. So now we know we're bearish. We want to be a seller. We want to sell before we get down to that magnet. Right? That's key here, and we'd like to find some levels of resistance. Now, I think there's really one big component in the medium term, and that is this wedge. Now, what do wedges tell me? Wedges tell me a lot of important things. They tell me direction. You never want to go against the direction of a wedge. It's very powerful because wedges are probably one of the most emotional chart patterns you're ever going to see. When I see a wedge, I always know that market is they're amped up for something. They're either coming off the highs, trying to go back. When I see a wedge, wedges are like channels that are impatient, right? Think about it. That's what a channel, a wedge is a channel that is impatient. It's like a toddler, right? It won't wait long enough to sell the high. The bears are aggressive, right? They're not waiting to sell the high of the channel. They're selling it early. They're being very aggressive right now. It's an emotional type of chart pattern. The reason why that's important is because, well, first of all, you never want to fight the direction. Second thing is, the place where they come together is a very strong level of support. Now, sometimes the market will go through it and then bounce back up. It happens like that all the time. It'll go through the low of the wedge. Again, these are very emotional markets when you see a wedge. Very strong move through, and then it comes back up into it. But this area is a significant level of support. It's also an area around that magnet where we'd expect sellers, in this case, to be taking profit. Now, another big factor in the wedge, possibly the most important factor that I want you to learn here, if this is the first time we've talked about this with you, and that is as the wedge gets narrower. There's plenty of space inside the wedge early in the wedge, but then as it starts getting cramped, right, like a little studio apartment, now that wedge starts to get really tight. Now remember, if I sell near the top of the wedge when it's wide, I can risk small to earn large, right? I can risk small to earn large. But as I start getting down towards the tight area, I can't do that anymore. I can't get those risk small to earn large setups anymore. And what's going to happen? The professional sellers are going to reject this idea. Now again, I'm going to remind you, wedges are very emotional. So I wouldn't be surprised if this thing just shoots right down, right? And keep I wouldn't be surprised. So just be aware, we may see some real chaotic price action. But a lot of times, though, when you see these narrowing wedges like this, the sellers are going to say, no, I'm not going to sell here. There's no easy line of sight. I can't trust it going lower because we're right into that trend line. And a lot of times what happens is we get that sharp pullback. So be aware of that sharp pullback. When we get that sharp pullback, as this wedge gets a bit cramped, right, as your leg room starts to get eaten up, we start to see those pullbacks because sellers just don't want to sell into a tight area. When that correction happens, that pullback, it's usually going to be a pretty sharp pullback. You don't want to trust it as a reversal until they hold that pullback. Once they actually hold the pullback, now it becomes a 1, 2, 3. We mark up our highs, we mark up that low, and we're now buying off the low of that hidden channel. Or maybe they simply don't pull back, right? And maybe the market jumps and rips higher. We get a 2-try trap. These patterns, these 2-try trap patterns, these are all about personality. You'll know it when you see it. When the market races higher and it's like everybody's buying and nobody's taking profit, right? You know what I mean? These types of markets, they have this feeling to them. They feel like they're never going to stop. If you feel that price action going higher here, don't chase after it. This will almost always be a shallow pullback. The first pullback, higher high in price, will trap low. And again, I'm always trying to find some additional level of support to use. Buyers want to go back up, obviously, here to retest those highs at 1742. Those are some patterns we're watching for if they can hold that pullback. Now, a couple things you want to think about. What if they can't hold that pullback? What if we break higher here? Right? What if I get that pullback here right now? And again, I've already talked about, right? I like to draw my channels off the lows. There's my hidden channel. That's going to be a key level of resistance. Gold is notorious for these trend lines right there, right? We just don't see this as often on other markets. I'm not sure why, but this is like a very consistent personality trait with gold. They love to use, they're kind of like reversal lines, I would call them, you know what I mean? But they're like, what was support becomes resistance, right? So this could also be a level of resistance. Now, a lot of this has to do with the strength of the move. If we see a 1, 2, 3 move up, I draw that trend line. I use that trend line, like we talked about on oil, for what's it called again? A two-legged pullback. The reason we call it two-legged pullback is those 1, 2 legs in the pullback. Most of the time, you're going to get that sharp pullback. You'll get that moving average coming up. The buyers now will try to buy the pullback, right? They'll try to reverse the trend. And what's happened lately? Every time those buyers have tried to buy that pullback, every time we get above that moving average, how's that going for you so far, bears or bulls? How's that working out for you? Not very well. So that's exactly the pattern I'm looking for here to sell off that high. Up at a level of resistance, buyers come in, they try to buy into that, into what they probably don't realize is resistance. It's not a bull market. It's way too bearish. I know now where their stops are. I know where their pain points are. I know where those buyers are going to start waving the white flag. Get me out, get me out. I can sell right into those stops. Now, a lot of times what happens is you'll see that market shoot lower. You don't want to trade into those lows here now, and so wait for the pullback, right? That pullback, it's always incredible how many times the market will pull right back, almost identically to the same spot where all the all the bulls got stopped out. It's almost like the buyers, they know they're wrong, and they don't get out until it comes back to their point of entry. Right? That's always been my theory. My theory is professional buyers who are trying to pick that bottom, they don't get out like rookies would with a small stop. They know that pullback's going to come, and they leave themselves in, and they get out there. It's almost like, think about it. If you were a buyer and you got out at your point of entry, right? You don't get stopped out. Again, the rookies will. Professionals, though, what will do is they'll let this market go lower, right? I know it's very aggressive. We're talking about big lot traders here. They know that pullback is so consistent. And what they'll do is they'll say, okay, I'm wrong about the trade. I'll wait till you pull back and I'll get out then. Then you've got big lot buyers getting out. And what that produces is big lot sellers, right? That's how you know where sellers are going to be in the markets. A lot of people, tell me I should use some volume spread stuff, right? Look inside the candlesticks, if you will. There's a lot of those really expensive pieces of software that look inside the candles. You don't need to look inside the candles. You just need to know how to be empathetic. You just got to think about the people who are in the market right now. Think about the guy or gal on the other side of that trade and what might he be doing. That is a technique I know a lot of professionals use, and that's why that pullback pattern works so well. It's not a lot of sellers getting in. It's a lot of the buyers who realize they're wrong and they're getting out. They're going, okay, I'm back to my point of entry. Get me out, right? Hit me. And they get out, and the market collapses back down from there. Now, I want to make sure to remember, too, again, we may get a very sharp pullback here. If it really pulls back and rips strong, it's not a reversal until they hold that pullback. If it really rips higher here, now I'm going to take out the big guns and use, well, not that big of a gun, but the nested failure, right? The 1 and the 2, right? The 1 and the 2. Okay, so again, a relatively shallow pullback, a failure back down, a real deep pullback here now. Now momentum is a little bit scary, right? Now it's getting serious. We let them try once. We let them try twice. We call these nested failures. And again, we look to sell into those stops. Now, a lot of times, you're not going to get that pullback right away on these nesteds. A lot of times, if it really pulls back, 1 try, 2 try, it's going to rip lower. Don't sell into those lows. I'm looking for that trap setup, because trap patterns are my favorite setups when what? When I don't want to sell into support. So support's right back at that low, right? It's a nested failure into basically a bull trap, right? I call it a two-try trap pattern. And again, I keep reminding you guys, I cover all these patterns, right? The base of these patterns in that free trading course, and we'll do it together tomorrow in the trade room as well. I'll put all the links for us in the description of this YouTube video. Now, we may go sideways down here, right? We may go sideways here at any point. We may come down, go sideways here, right? So be aware, if we start going sideways on this measured move, double bottoms, double top. When I say range, you say what? Failures. Wait for the pop up. Wait for that buyer pull back. Those poor buyers here, right? They haven't learned anything yet, apparently, and we're selling into those stop losses. If the market keeps running lower, we know where that magnet is. No good. I don't want to sell down there. Keep waiting for those pops. Keep waiting for those buyers to try to buy the pullback, right? It's not a bull market. We're going to keep selling into those stop losses. And the same thing applies. If it really pops, like really pops, and hasn't held the pullback yet, it's one, it's two, it's nested back down into that trap. Same basic idea as we just talked about. It all depends on how that pullback, right, how it happens. And then again, if this thing really runs, right, if we start seeing a bloodbath and this thing rips through, 1, 2, 3, go. I have no problem if I get a lot of momentum, find that new channel, selling off the top of that new channel, or 1, 2, 3, strong move down. At this point, it's a runaway, right? Everybody's piling on. There's very few green candles. Any green candles being sold. At that point now, we wait for usually to be a shallow pullback, a lower low, and then a trap high from there. And again, you know where we're trying to go on that, right? We're trying to get off the top of that hidden channel, always, right? Always. And of course, we know we're trying to go potentially, again, it seems a bit much for tomorrow's session, but potentially all the way down to 1600, potentially, right here for tomorrow. So I know I covered a lot here on the gold, but I thought you guys can handle it. You can handle it, especially if you tune in every evening, right, and follow along. And again, right, we're going to go a lot deeper into this tomorrow morning in our trade room. Let's wrap things up here right now on the S&P. I know I'm running late here tonight, so again, I do apologize, right, for being a little bit late here. I'll try to make this as quick but as thorough as I can. What do we know about the S&P right now? We know, of course, we have a strong move down. This most recent, very strong move down. We know we are bearish in a bear market. I want to sell at a level of resistance. Now, where do these bears want to get to? We know we had that big jump up from this morning, right? Anytime we see a rally, we know where they're trying to go. They're trying to get down to that low. This is just like that magnet we just had on the gold, right? This is an area where we anticipate for there to be buyers coming in the market. We expect all the sellers who got short. We expect those sellers taking some profit down here. So this is the place I do not want to be selling. Let's take a look at the big picture though. If they can crack this nut, okay, if they can get through this, I mean, this looks like public. Again, it's a major level of support right now, but I mean, it's about as sturdy as a matchstick, as you can see. There's not a lot there. Remember that big move up? There's no volume there. If you were to look at a volume profile, I don't think you need to get one of those fancy charts to do this, but if you look at the range here, the range up there, if they keep going, look out below. This is a chart that bulls do not want to see, right? This is a chart the bulls do not want to see right now. There is, remember, this move higher here, this move higher on Monday was so red hot, right? This runaway market. Those easy come, easy go. This is where the term easy come, easy go comes from. This is the definition of easy come, easy go. You get these big ripping markets all really on skepticism, on speculation. Really, there was no hard data coming out besides just optimism after this weekend. And so, I mean, this could evaporate in a heartbeat, and we could be back down to that 2,500. But again, The key though is we've got to be aware of where we are. I don't think we're in a position right now to be calling that big drop just yet. We've got that big move up from yesterday. They trapped low, they ran higher here, and they're right back to where they came from. It's almost the same thing as gold, where we're just too far down on the chart to be trying to sell at this point. So we already know we're there, right? We already know we're almost at today's low. Very strong level of support. We know the bulls, they want to get back up to retest those highs. I mean, in all reality, this might be carving its way into being one big range. For all I know, we'll talk about how to trade this thing long. It's not going to be easy. I'll give you a clue on that. Being a buyer right now on this S&P, I should say it's not going to be easy with a small stop loss. You could buy this right now and put your stop down at that 2,500 and just gamble on it, but that's not what we're here to do. We're here to find small risk, big reward opportunities, because you can build your career on that. You can push your kids through college on that, right? Pay the mortgage off on that. Small risk, big reward. That's the good stuff when it comes to trading. We also know, since we're bearish here, we want to be a seller at resistance. So where's my resistance? Now, I mentioned this on oil. I think it was oil. Yeah, oil, right? This is basically, I see it as a 1, 2, 3 move. So what I'm going to do is I'm going to mark up that low. I'm going to mark up that high, and that becomes a very attractive area of resistance. Now, the reality is that's a pretty darn big pullback. I mean, look at how strong that recent move was. And the one thing I've learned about trading over the past 10 years, one very important thing is when a market is red, when you see a very strong move down like that, you're probably not going to get an 80% pullback. It's just probably not going to happen. All things equal. Unless we hear some news, unless the information we're getting changes. If you're seeing a very strong move down like this and you're trying to get some insane, deep pullback, it's just not likely. It's just not likely. So to account for that, what I'm doing here is I'm adjusting with a smaller channel. I'm drawing off of these lows up to those highs, and this is a much more realistic pullback because of the overall strength of this market. So, again, one very easy takeaway is if you get a lot of strength in the market, we all want to wait for 61.8% pullbacks, but don't hold your breath for them, right? Don't hold your breath for them. You're more likely to see a 30 or a 50% pullback, not a 60 to 70 or 80% pullback, which we all want, but, again, don't hold your breath for it. So those are key levels of resistance. I'm also watching this little guy over here, this 82 3/4 area. Something's there, right? Something's there. I'm not sure what exactly it is. I really don't need to know, to be honest with you, but something is definitely there. That is clearly a level of resistance to use as well. So we know we're looking good here for plenty of areas of resistance. I really got to be careful being a seller as we go lower here. So it's in my eyes, it's pretty cut and dry. If I get a shallow pullback up to that first kind of, low of that sell zone, I'm looking for buyers to try to buy off the pullback. I'm looking for a buyer failure into a seller pullback combination. This is something we've already talked about many times on this already. It is a seller failure pattern up above the high. A buyer failure pattern. Excuse me, I don't mean to make a complicated topic even more complicated. I will try to use the right English here. So it's a buyer failure, right? We get above the moving average. Buyers try to buy. We know where their stops are. The key is we're not bullish. And so a pullback pattern off the moving average, I don't care how many indicators are firing off. It's not a reliable trade, especially if you're combining this channel, right? That trend line coming down. Those are sheep walking into slaughter. Now, again, if they hold this, that's a different story. Okay, we'll talk about that here in a moment. Okay, then into a pullback pattern as we go. Now, again, we may get kind of that dream come true for these bears, and we might really pop. If we really pop up into the deeper part of that sell zone, now this is not going to look very bearish anymore. It's not going to be bullish anymore, though, unless they can hold, right? Unless they hold that pullback. If they can hold the pullback, it's a reversal. If they can't, though, it's a 1, it's a 2. Once we get that, 2 tries now, and again, we look for 2 tries because of what? Because of that momentum. right? It's way too strong to want to just sell into it. The buyers will likely beat their chest, right? They'll put their weight into it, and they'll try to run this thing going higher here. And if they do, by the way, then we know we got that 1, 2, 3 reversal, and now we can buy off of that low. Just make sure you're doing it before you get back up into that range. Or if they keep it running, right? If they punch higher here, 2-try trap off of that low. Do you see how we keep using the same ingredients? Right? We're using the same ingredients here, the same patterns, the same strategy. We're using momentum, we're using support and resistance, and we're using entry patterns, right? I use a whole checklist for this, by the way, right? In my trade room tomorrow, we'll have a whole checklist, right? And we'll go right over it. Do I have momentum? Do I have my levels? What's my pattern? Do I have room for a risk reward? Right? That checklist, I give it to all my clients, and we'll do it all together. Again, tomorrow, grab that link in the description of the YouTube video, get registered. Okay, stop throwing money out the window, right? You can do this on your own. Okay, you can watch all the YouTube videos in the world if you want, right? But I'll give you the whole blueprint as a client of mine. Very easy shortcut. So those are, again, I lost track there, as we go higher, right? Big pop higher, what do we look for? The nested, right? The 1, the 2. Now remember, those nested patterns, when these things fail, they usually run, right? They run, and you get patterns like this, where it makes a strong move down, a lower low, and a trap high. Okay, that is exactly what you're looking for over here. Right? A strong move down, a shallow pullback, a trap high, and go. Right? See what happens? When you get these big pullbacks and it falls apart, that momentum is so strong, shallow pullback, trap. Everybody's piling on for that trap. That is a professional's trade right there. Right? The rookies will jump into the pullback. The pros are going, no. Give me that trap. I want that trap. Right? So we go up, a big pullback, nested failure. I don't want to repeat myself too many times. You guys are busy people. Strong move down. Don't chase it. Shallow pullback. Lower low. We don't want to sell into that low. We know they're trying to go. We want to sell at resistance. Right above that high. Right above that high. Hit it. Right? And hit it hard. That is one of those patterns where you got to have the confidence to hit it. Right, as my buddy, may you rest in peace, Mr. Mark Douglas. Right, embrace the law of large numbers, embrace the random result, and hit it. Right, as long as you're not at that low, as long as you can risk small and earn large on that setup, you're good to go on that 2-try trap. Now again, right, kind of a matchstick level down here. If we pull back and we blow through, it's on. Mark up that low. I would definitely mark this up as a dual channel personally, and look for the sell, right? The sell off those 2 levels as we go. Or again, if it really takes a nosedive, strong move down, shallow pullback, trap, and go. This will usually be just above the moving average. I've been looking for those right channels, and you know where we're trying to go from there. All right, just in time to keep this under 1 hour for you guys. I know I try to make these videos as short as I can, but I mean, how do you condense this good information? I know the most successful traders appreciate it, and I appreciate you being here with me. In fact, if you're still here right now, let me know you're still here. Hashtag still here in the comments. Hashtag 1%er in the comments. Hashtag I'm gonna make this work if it kills me in the comments. I was the same way when I was a rookie. I still kind of do eat, sleep, and breathe these markets. But man, oh man, I really appreciate you guys being here with me here this late in the evening. As always, don't forget, get registered as a member. I'll put all the links for tomorrow morning's for membership, and of course to get registered for the trade room tomorrow in the description of this YouTube video. I'll put everything in the description or below the video tonight on the trading blog. Don't be afraid. Don't let my ugly mug scare you away, right? Don't be afraid to call that toll-free phone number and call me up tonight. I can help walk you through it. don't be afraid to use that live support. And please, if membership isn't quite a good fit for you, at the very least, grab the free course. It's part of our free trial. You're going to love it, right? It'll completely open your eyes to what I believe is kind of the new breed of the way these markets work. Guys, I would love to get your feedback. I want you to make sure you subscribe to the YouTube channel. Hit that thumbs up button for me. Let me know you're still here. Drop those questions in the comment section below. Share this information with a friend, and come back and see us again soon. And again, as always, if this virus is affecting you right now, give them hell out there. Give them hell out there. We're almost through this bull, right? We're almost through it. Give them hell out there. Keep positive. Keep pushing. Right? You know what they say, right? When you're going through hell, go faster, right? Just keep on pushing through. My heart goes out to everyone being affected by this. Stay strong out there. Be nice to your neighbors. Take care of each other right now. Tomorrow morning, though, razor focus. Razor focus tomorrow. It's the last full session of the week. I've taken up way too much of your valuable time. Get out of here. Enjoy time with the family and friends. Get some sleep, and we'll see you guys tomorrow. As always, my name is Joseph. Be well out there. Be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.